Good morning, everybody. It is January 5th, 2023. Happy New Year to everybody. Hope everybody had a good holiday. I went on a little vacation and then had a little data issue that I had to sort out the other day, and then I had to rebuild some charts and stuff like that. So that's why I haven't made a stream. So that's why I was a little bit missing in action this week. But I'm back. Um, let's get into some watch lists here to see what's going on. And there's not going to be a lot going on except crude. Crude's up almost 2%, 45 a barrel. Basically, that's because China's opening up their borders. I believe in mainland China, and they're. I just know they're opening their borders up, which is positive for oil. Okay, but however, the VIX is up 1.41%. 10-year yield is up. The dollar's up. Okay, part of my triple headed monster. And let's see, Bitcoin's kind of flat. NQ's down 0.24, ES down 0.28. We have news coming. Okay. Um, so news came out at 8:15. I'm gonna go right to that in a second. We have news coming out in 4 minutes. I just want to go over these. The Dow's down 0.31. Selling some bonds here, the 30-year bonds, and the Russell's down 0.38. Okay. Um, let's look at leaders and laggards. We got Amazon's up 1.27%. Amazon's laying off 18,000 people, originally 10,000 people. That's why that's going on. They're going to have obviously more profits, cutting the labor force. Um, Apple's up 0.82. Let's look at a laggard. Coin got a downgrade. That's why it's down 5.86%. It's a pretty big downgrade, and Baba is down 1.85%. All right, no surprise here. We got Chevron and Exxon up, but not huge. All right, only laggard to speak of is J.P. Morgan, which is not that big of a laggard. And the sectors, we have energy, no surprise, up, and the laggard is basic materials and real estate, which is we're waiting on data. Okay, we have non-farm payrolls tomorrow and unemployment. Today we had 80p non-farm employment change. Okay, and this was not a good number. Hence, probably why the market dipped a little bit. So let's look at that. All right, so we have this number was bigger than expected, a lot bigger, probably causing the market to dip a little bit. But in 1 minute, we have initial jobless claims. We're expecting 225. Obviously, if this number is less, that's going to be bearish. Previous was 225. So these are people filing for initial jobless claims. So uh, we need to, if you want to be a bull, you want to see this number go higher than the forecast. Okay, we have some Fed speak today. Bostic. We have S&P Global Composite PMI at 945, Services PMI 945. So be careful if you're in day trades with this. Crude inventories at 11. Okay, that's because of the shortened week. It's usually at Wednesday at 10:30, but today it's at 11, and we have Bullard talking at 1:20. All right, so this news is releasing in about 50 seconds. So we had Fed minutes, which was a nothing burger yesterday. Pretty much nothing new came out of that yesterday. So basically, it looks like we're gonna wait on tomorrow. And tomorrow we have non-farm payrolls and unemployment. Okay, ISM. So we have those. So let's look at these. What this does. Looking at the jobless claims coming out in 1 minute. Well, less than 1 minute, 10 seconds. So this should update live. Let's see here. All right, there we go. That's trade balance. Let's see those jobless claims pop up here. I mean, I guess that's a little good. The trade balance. Expecting minus 73, got minus 61, but come on, jobless claims. There we go. Still not good. There we go. Still not good. You need these to go higher. Okay. When I say not good, I don't have a. It doesn't matter to me up or down. I'm just saying not good. Whenever I say not good, I guess it means like the market's not going to go higher on this. Okay. Just overall for the market. Okay. So initial jobless claims was 204. We expected 225. That's still a tight labor market. Okay. So let's look at that. What that's doing. All right. We got to look at what that's doing, and let's do that now. Just give me one sec. I'm actually gonna pull up. Let me pull up the daily chart real quick. Take this down really quickly. Go to the trading template. I just want to see what the market's doing with this news. All right, as expected, we're moving lower. It's not flying lower, but it's going to the lower end of the overnight session now. Okay. You can see here, I can split it out really quickly here. You can see, I'll break it out into 30-minute bars, and you can see what this news just did. So we were here, right here, and we dropped all the way down. So we were at 38.78, and we're all down to 38.54 in this last half hour bar. Actually, in the last 2 minutes, because this just started 2 minutes ago, this bar. So that's what that news. So basically all the longs have been taken out from the overnight. You can see there was longs here, support around here. They just got their stops ran. So I'm just gonna reposition this. All right, let's go back to the daily chart. Let's go back here. It doesn't take a rocket science to know we've been in balance. Okay, balance. I mean, that's clear as day. We're in balance. Okay. We're going to break out of this range, and the longer the balance, the bigger the move, right? The more coiling of energy, the bigger the move is going to be from the balance, right? Just like we balanced a long time here, we finally broke out of it, and now we're balancing again. Okay, so that's what the SPY looks like now. I mean, there's not much to glean from this. I mean, that we're in balance, right? But let's look at the weeklies. Okay, so this is the COVID low, Fibonacci, all the way to the all-time highs. Now, originally, we bounced off the 50% retracement right here, and you could say the 200-day moving average on the weekly kind of caused support right here. 50% bounced off, hit the trend line. This trend line's been strong. This is really strong downtrend line, and now we're balancing, right, these last 3 weeks. So right now we're hanging on, but we have to see, right? Because you still have the 200-day moving average, and we still have the 50% retracement here. We haven't come to that yet in the SPY. Okay. So, and then let's look at the SPY this way. You can see the balance. So every one of these profiles is a weekly profile, so you could just see the balance. Most traded price, right? Just in this area, right? Okay, let's look at those Qs. So the Qs in a balance, right? Right here, we're in a balance. So imbalance, no doubt. Let's look at the weeklies here. Now in the Qs, this is the weeklies, okay? I have the COVID low here to the all-time highs. Now the Qs bounced off 61.8 Fibonacci. That was that support. Now we're almost there again. Okay, we've broken the 200-day moving average and the weeklies. So I'm looking at this 251 support. Have an alert there. So clearly Qs are weaker. You can see here we're just in a balancing range. Not as much as the SPY, but we are. 2 weeks in a row. Most trader prices here. You can see right here there's a little red bar right now. So we're kind of like until we get out of this range, you either people are fading the edges, and eventually we're gonna break out. Okay, let's move on. Let's go to the triple headed monster. Let's go to 10-year yield. 10-year yield. So 10-year yield. So this was moving up. Then it moved down. Okay. Now it's starting to move up again. This might be a swing low. Okay. So we have to see now. It broke this downtrend. This downtrend's broken. We can now say we have a trend starting from here. This is the swing low. It broke. It's breaking this downtrend here. Or already did break it here, so I'm gonna get rid of this for now. Alright, so yields start rising again. You know what's gonna happen to the equity market? It's gonna go down. Okay. So we have to see, keep a watch on that. That's the smart money. Let's go to that VIX. Alright, let's take some of these off because they're just not in play anymore. So the VIX is in this range right here. We're just in this range around 22. So it's not really showing its hand much. And finally the dollar. That's just in a range, boy. Oof. Look at that. 105 down to 103. It's just chopping around there. So not really showing its hand. Below the 200-day moving average. Holding up this trend line. It's not really showing its hand. Alright. We could probably get rid of this. Really holding on. This is like actually a big key support here. Let's go here. That 103. So not showing its hand. So let's move back. Let's look at some market profile. And I'm going to change it up now. Going forward a little bit, I'm going to get a little less granular. Make it less, try to make these smaller. If I only see things in some charts, I'm going to note them. I'm going to try to eventually explain, maybe have some mini courses on what I say. So that way when I speak in my videos, you can reference those other videos to know what I'm talking about. Because sometimes it just takes too long. And I got to prepare to get trading, and I don't want to waste anybody's time having a long video. Not to say that they're not informative for some people, but I'm going to try to make them a little shorter. So here we go. Let's look at this. Price is here in the ES, 38.53, right? So what do we have? Classic high of yesterday, low of yesterday, overnight high, overnight low. We're inside yesterday's range. But the real thing, and I can show you guys just what you guys would see more on a SPY, just the RTH sessions. here on a market profile, and you can just see the balance just like you would on the SPY. Okay, this is just 9:30 to 4:15, and you can see the most traded price of the month is here, which is 38.60 about. Most traded price of the week is here. Whenever they're like this, that's ultimate balance. Okay, that's a chop zone. You don't want to trade in here. You're gonna get chopped up, right? So you got to look for trades on the outsides. Okay. So that now that I'm showing you where this is the RTH, that's where I'm getting this turquoise box for the most traded price of the month and the most traded price of the week, right? Which is most traded price of the week is 38.45. All right. So we're just in balance. So there's not a lot to analyze. There's just not, because we're in this big balance area. We need a catalyst to get us out. Tomorrow could be the catalyst with the non-farm payrolls and unemployment. Okay. If it's a really big overshoot or undershoot, we're going to probably break out. Unfortunately, that'll probably happen pre-market. So if you wanted to trade futures, obviously you could. So that's an alternative. You could trade futures, or you could do options on futures for that move. Straddle might be in the cards. Okay. So this is just ultimate balance. I mean, we're inside yesterday. There's nothing to glean from it. Really not. All right. There's nothing granular to say about it. So let's look at the Nasdaq. Okay. Nasdaq, same thing. Ultimate balance, right? You got the most traded price of the week and the month, really net close to on top of each other. Okay. You can see too. A lot of. I mean, like I said, from a candlestick chart, anybody can see we're in a range. But why I love volume profile, clearly can see the profile is just a beautiful bell curve, right? You can just see it. That means there's excess on the bottom, excess at the top, and we're just chopping around in this value area. That's a highlighted light blue area of the week. That's the value area. 70% of the trades happening within that area. So you don't want to trade in this. You're going to get chopped up. Back when I started, I would have probably went long, went short, went long, went short, all within this area, and I would not be very successful. Okay? So name of the game is you want shorts up here, you want right now, and longs down here until something happens, right? A catalyst or something to break us out of this range. I mean, if you look at the Nasdaq, it's pretty powerful. It's like 108.55 support area here. Look at these lows here, right? So what I mean by that is, look, every time you revisit the lows, it gets bought. Revisit the low, bought. Revisit this low, bought. Right? Now, that doesn't mean the next time we revisit it gets bought, but until there's a catalyst, it could come down here again and get bought. Right? So the lows are more weak, but there's buyers stepping in, right? So you can see here over the RTH highs here, RTH low here, overnight sessions inside yesterday's range. Doesn't tell you a lot. And look at price, right at the most traded price of the month and the week. Nothing can glean from that. There's nothing to do, nothing to read other than looking at the range. You have kind of like a mini range highs here, and then you have outside of the range highs here. Really nothing to do unless you act on the edge, right? You can just see that profile is just perfect, right? So we need to get out of this range. We will, and the move will be nice. But until we see something, right? Like tomorrow is a perfect opportunity for the market to blast out of this. And shorts are going to get run over, or longs are. It's really that simple. Okay. So I'm not even going to go into the hourly chart. It doesn't really matter. I mean, we're just in a balance range. So what I'm going to switch over to is the market profile. I'll hit you with the watch list. There's no point in showing you a 60-minute chart. I mean, we're in balance. Um, that's a really the gist of it, right? The only thing I can go over, which I can go over in the other chart, is really just the the edge of the balance level, support and resistance. So we have resistance. Let me just go over to this 60-minute chart just really quickly, just so we have levels. All right, we have resistance at 39.32, 39.19. Those are like the outside. 39.06. These are like the outside resistance levels. All right. We have support. The support is more strong here at 38.06. You can see the range here. We're just chopping in this range. So those are the areas you got to look for. You don't want to trade in here. It's just a mess. Okay. And real quick, we'll just go over to the NASDAQ. Just to show you some levels. And you can see that 108.55 level. It's a pretty good support line here. So look at this. 108 support level, right? And then we have this swing low 170, but this 108.55 has been supported one, twice, three, four times, and we have a resistance at 110.46, and we have the top of the bracket really at 111.77. Okay, so that's really, the other thing here is this trend line's been pretty good too. It's been hit after it once, twice, basically here too. If it gets bounced, it could bounce off it. So that's those. Like I said, we're in balance. Not much to do. Not much to talk about there. All right. So very easy. What I'm looking at here, and the only way to be active, okay, is it's very simple. Obviously, we're gonna go to if we're gonna go to any kind of bull case, we have to break 39.06. Just happens to be the 50-day, the 20 moving average on a daily chart. Okay, so we basically have to come up here and break this 39.06 to move higher. That's it. Bearish case, we have to break 38.06 right here to go lower, right? That's the breakout points. I mean, it doesn't get any more simpler than that, right? Because this is just chop. You don't want to be in there. Okay, you don't want to be involved in that chop. Okay, going to be a very hard trade. So now, as far as what I'm looking for, because I feel like the catalyst is tomorrow. Okay, all I'm looking for is two things, which is very simple, right? If we make it up here into this supply zone, and now you have a couple things here. You have a naked VPOC, you have the 20-day moving average, you have supply, and you have a strong resistance line. Okay, I'm gonna wait, and if we do this, I'm gonna wait, and I'm gonna wait to see if we can, how the market's looking internally with certain indicators that I watch to see if I can fade it, if I can short, and I'm gonna target the most traded prices of the month, the week. I'm gonna fade back, and hopefully maybe I can make it back to here, the ultimate goal, right? Flip it around, right? Just flip this around. I'll give you maybe a different color here. Let's do like a light orange here. So same thing. If we come down here, right, and there's a demand zone down here, so it could go. It could this support level is just going to show me, can we break it? Because if we come back up, and shorts not getting anything, I'm gonna want to go long, right? And target again these areas here, and hopefully get a good target back to the other end of the range. That's really it. That's really it. So, and so just like over here, there's no difference. This 180, 108.55 is a key support level. How does the market react to it? I'm just gonna watch. There's a demand zone here. Okay, so how does it react here? This is all how it reacts. Now, remember, I don't think there's a catalyst now that these news are coming. There is news at 9:45 today, and I have to see if it's 10 a.m. But I know there's news, so be a lookout. I'm probably not going to trade for the first half hour, so I have to look and just watch. I'm going to watch and be patient. If the sellers can't get anywhere, then we're probably going to traverse, target here, and then go to the other end of the range maybe. Okay. And same on the fading at the top, right? This 111.77. If the market does move up into this area, supply zone, I'm going to watch to see how it reacts at this level and how the market is looking internally. Okay, all depends on what happens here. And if it can't, the longs can't sustain it, we're going to drop back into the range and target here. You could target a developing point of control or VWAP or whatever you choose, but then I'm going to plan to take it all the way back down to here. That's all I'm looking at today. I don't think the catalyst is there today. I could be wrong. There's Fed speaking, there's a bunch of things happening. So that's what I'm looking at. That's it for me. If anybody's even watching, hopefully you glean something from what I'm saying. Wow. Well, that's not good. I'm glad I have my drawing still up. I apologize for that. I'm a little rusty, I guess. That sucked. That really sucked. So you can see on the NASDAQ what I wrote here. I'm just going to real quickly draw these out of what I'm seeing. So I'm sorry, I apologize for that. All I said before is I'm going to look at 3806 in demand zone, see what we do here. If we can't go lower, I'm going to hope to go long. Come back up. It's really what I'm looking at. Okay. I don't want to jip anybody from what I just did. I apologize from that. So the same thing up here. We come up here. I said we have the 20-day moving average. We have a supply zone. We have this 3906. Can't make it higher. I'm going to fade it. Target here and target back the other side of range. Okay. Let's go to the chart. NASDAQ. Same thing. If we come down to this 108.55 in demand, I want to really watch to see how the market reacts and how the internals look. If the sellers get nothing here, I want to go long, target here, target the other end of range. Alright, same thing. If we come up all the way up here, I want to see in supply zone, what do we do with this area here? If the market's not super strong, we're probably going to go back, and I'm going to look to fade it back, target here and target back. So I apologize again. I'm a little rusty. Haven't done a video in a little bit. Sorry about that. But that's going to be it for me, guys. I'm so sorry about that again. I feel bad about that now. That's it for me. I'm going to now look at crude to see what I could do with that. And give me a comment, like, or subscribe. And good luck to everybody today. Stay green. And you guys will hear from me tomorrow.